This is Kevin Crampton with Real Estate How To, where I bring you all of the trending insights from the Google machine on different articles and different topics related to housing and the real estate market in the United States. And I do all the deep digging so that you don't have to. So today I am bringing you an episode that kind of sheds light on a article that I stumbled across, and I liked it because it was a good sort of overview for somebody who maybe doesn't necessarily know a lot about real estate or the housing market, but might just want to put their finger on the pulse. And this episode is been brought by Business Insider, so a fairly reputable uh, source. And this is one of the more trending articles that I found when I was scouring the internet looking for trending stuff. So it's just a good overview on the housing market. And so we'll start by talking about the inventory, and so this article dives into the inventory and the supply and demand equilibriums and kind of how they're affecting the housing market. And basically the long and the short of it is that the housing market is still a seller's market. However, it's still going up. It's just not going up as fast, if that makes sense. So the trajectory is being affected by a lot of geopolitical factors and supply and demand factors that always go into the market. So a couple of things is that first off, the buyers, there's still more demand than there is supply. However, the buyers they keep getting bashed down from just about every possible angle that you can imagine. So the first thing is the inflation. Inflation started to sort of go off the rails, through the COVID era, and housing market inventory deficiencies were really starting to affect the supply and demand. That was sort of the first thing, and buyers started to have to really offer premiums in order for their offers to get accepted, and even to the fact that a lot of buyers started to have to take most of their contingencies off the table because they were competing with so many other buyers that if their offer was the one that was full of contingencies, a lot of those buyers were using strategies of taking contingencies out of their offers. So if your offer had an inspection or had an appraisal contingency or had these certain protections that were very normal and always have been very normal, you couldn't compete with the other buyers when the sellers would put their listing on the market and procure five, six, seven offers to choose from. If your offer was loaded with contingencies, they weren't going to select your offer. So that was the first thing, and really the best way that you can offset that and still keep your contingencies in is to offer more money to offset the risk to the seller. But that's what sort of drove prices up or started to drive prices up. The next thing came the interest rates, and again into the COVID area where interest rates dropped to historic lows. Well, in the last 18 months. 24 months really, the interest rates have gone way up in comparison to what they were at their record lows. So even though they're way up and they feel extremely high right now, they are higher than the 30-year average, but not much higher. So it's actually closer to the 30-year average than you would think, which is somewhere in the low fives on the average. So in came the interest rates, and they really started to affect buying power, which was by design. The Fed chairman Jerome Powell wanted to drive up interest rates because that is a way to drive down demand and sort of start to try to take control of the inflation issue that was happening. And again, this is all just as it relates to the housing market. So the first thing that the buyers were dealing with, they were getting crushed by premiums, prices. The second thing was they were getting crushed by interest rates or the cost that it cost to borrow money. Then the last thing that just recently happened is now buyers are facing this huge NAR settlement that is sort of creating some new additional logistics. Now, for most buyers, it's not really going to matter. Most sellers are still offering to pay a buyer agent commission so that you can buy a house, but some sellers now are taking that off the table, and it's just another thing that's starting to impact buyers. So that's what you have on the buyer side. Then you get into the seller side of things, and that is the inventory side of things. So buyer demand is still up, but it's decreasing because of all of what I just talked about there. Now, the sellers, many sellers that even do want to sell, simply can't sell because they purchased a house 3, 4, 5 years ago in these very low interest rate environments, and now that they might want to upgrade or relocate or move, put their house on the market, they can't, because if they did, then they would be trading in that interest rate that they had, maybe sometimes in the mid to high twos up into the mid threes, and now going into a mortgage rate environment where they're more than likely going to have to pay 6%, 6.5%, even some up to 7% in the current interest rates, and they just can't swing it. They would literally have to downgrade their housing in order to be able to sell their house. So sellers are just sitting on these low interest rates, and they're not selling their houses. This is exacerbating, obviously, the inventory deficiency, and it's just making it so that no inventory is coming into the market and just making things worse. So that's sort of part of the article here, and there's a lot of interesting things that I read in this article that I like. Obviously, it goes over the economy, and it goes over the mortgage rates and everything that we just talked about, low inventory. Housing market forecast. This is where I kind of read into this and found it sort of interesting. So the mortgage rates, obviously, they're starting to drop now that inflation is starting to drop. So again, inflation is still going up. It's just not going up as fast, and that's the key factor when it comes to Jerome Powell's policy of whether or not he's going to raise or lower interest rates. Now he's starting to indicate that he's going to be lowering interest rates, and I do expect that interest rates will be lower going in and through 2025. If you look at the home price predictions from sort of these major economic analysts. The first one, Fannie Mae sees home prices rising by 6.1% in 2024, which is still quite a bit in terms of housing prices. They're still improving by about little over 6% in 2024. However, they predict that it will slow to approximately 3% by the end of 2025. So what that means is, again, that trajectory that's been going up is going to be going up, but by half as much as it was before. So that's pretty interesting. And what I found even more interesting is that most of these analysts are sort of saying the same thing, which gives some validity to it. And obviously, nobody knows for sure, and neither do I. So don't listen to me. At least as it relates to my predictions, I'm more am a specialist in offering insight. But the Mortgage Bankers Association believes that prices will rise about 4%, so a little less than Fannie Mae was assuming for 2024. However, they predict 2.7% year over year growth for the year of 2025. So that's really close to that 3% estimation by Fannie Mae. Then you get into NAR. And NAR is a little bit more bullish, or sorry, a little bit more bearish. The National Association of Realtors thinks that existing home prices will increase by just under 4% in the year 2024, and that they'll increase by only 2% in the year 2025. So again, you're starting to sort of see a slowdown, maybe stabilization, which again, if you watch any of my videos, I believe that this is good. Anytime you party hard for a long time, you know that you're going to have a bad hangover. And the housing market has just been going up, 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 and literally to overheated, unhealthy peaks as it relates to the housing prices, and at some point it has to regress. It has to retrace, and I'm just hoping that it doesn't retrace in just an abrupt and acute fall off the face of the earth. I'd much rather see this start to slow down and sort of have a soft landing, as they say. So, kind of interesting as it relates to housing price estimations, at least by this article by Business Insider. So mortgage rate predictions, again, it's one of those things where they expect to still be a little bit high. I think we saw a lot of the movement as it relates to retracement and in lowering of interest rates, but we'll see. There's no way to know for sure. But I believe that there'll probably be less, and that's the same thing that this article is saying, is that we've probably seen most of the move in 2024, and I do think that we'll see some reductions in 2025. I just think that there'll be less than what we've already seen again, but these are coming off of highs, historic highs, as it relates to the last maybe 15 years. So probably still some more affordability to come for buyers in 2025. I just wouldn't expect to see the same degree of reductions in interest rates. But again, nobody knows for sure, and there's a lot happening. There's a lot happening politically, and it's a lot of just unknowns going into it, as everybody knows. So housing inventory forecast for housing market conditions to improve, housing supplies need to increase, obviously. But again, we're not seeing any catalyst that's suggesting that we're going to have mass imports of inventory coming into the market. At least I hope not, because one of the biggest ways to have a lot of inventory come into the market is to have a big rash in foreclosures, which is what I'm praying doesn't happen, but there's no way to know for sure. Some signs are pointing towards foreclosures coming into the market, but that's not necessarily a good thing, at least for somebody like me who works in the housing industry. Maybe for somebody who's looking for opportunities to invest in real estate, you might run into some opportunities if that happens. So kind of a double-edged sword there. But one thing that I will say is that if mortgage rates do improve, is that mortgage rates could come down and kind of make that difference between the people who are sitting on these lower interest rates and what the current interest rates are. The less of a gap there is between those, the more likely that they are to make that move, because it's a lot more palatable than trading in a 3% interest rate for a 7% interest rate. Trading in a 3% interest rate for a high fours or 5% interest rate, that's a lot more tolerable and potentially doable for a lot of sellers. So we're going to keep a close eye on that, and there's just no way to know for sure what's going to happen with that. But again, keeping your finger on the pulse and just having a literacy in these different topics is always what's going to be in your best interest. This article then kind of continues and goes on. Is now a good time to buy a house? Is it ever a good time to buy a house? Is it going to be a seller's market forever? The bottom line is that and sort of what this article kind of delves into is that the market always goes up and the market always comes down. It's never going to be stormy forever, and it's never going to be sunny forever. At the end of the day, the question of whether or not it's a good time for you to buy a house or for you to sell a house is completely subjective to your own situation. There's no way to know for sure. Or to blanket a statement that to just say to everybody whether or not it's a good time to buy a house or a good time to sell a house. It just really depends on your own situation. So this I just found is a good just overall article, something to read, something that will get your finger on the pulse of the housing market, whether you're a buyer or you're a seller. Again, always keep in mind there's no right or wrong answers to whether or not that you should buy a house or sell a house, or how to buy a house or how to sell a house. So the point is to make sure that you're confident and informed as you go through the home buying or selling process. So as always, thank you so much for watching, and have a great day.